In trading, consistency is more powerful than intensity. One great trade won't make you, but one bad habit can break you. Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. We are here to get ready for Tuesday's market, and as always, preparation is the edge that separates smart traders from the rest. In today's video, we'll go over the key support and resistance levels, possible trade setups, and the market sentiment you need to keep in mind before the opening bell rings tomorrow. Remember, trading isn't about catching every move, it's about catching the right moves with discipline. So, if this analysis helps sharpen your game, make sure you like the video, subscribe to the channel if you haven't already, and drop your thoughts in the comments. Let's jump in and plan ahead for Tuesday with clarity and confidence. And as usual, the video will be divided into two parts. The first part where we'll discuss about the markets today, what we had planned versus what happened, and how did we play it out. And then we'll be planning the trade setup for tomorrow. Now, before I dived any deeper into the charts, my usual word of caution, tomorrow is the weekly expiry of Nifty. Most traders, along with Nifty, is still adjusting to this big shift in the regime after almost 25 years. So play it safe. And in case if you are into option buyings just like me, make sure to shift your trading to the next week's expiry instead of trading tomorrow's expiry options. This will maybe you will be paying a slightly higher premium for your entries, but this will be a good step to safeguard your capital against potential losses. And on that word of caution, we'll start with the analysis. Now, what we had planned was that we are looking at this particular trend line above this particular swing high. We can look for a long entry with a pullback. Now, markets opened with a slight gap up. People were anticipating a huge gap up. I don't know for what reason, but there were it was all over Twitter and X that people are anticipating a good gap up on Monday. But then markets opened with a small decent gap up above our swing, gave us the pullback that we needed. Now, this was the first trade that I took early in the day. After this pullback, as soon as this high was taken out, I had taken this entry around 9:35 itself. Yeah, it's a pretty early entry for me. I had placed the stop loss just below this swing. Immediately after my entry, my position went into some loss. And then a green candle came in, which formed this swing. Now, although this was an SL trade, I'm just explaining how even I trail my SL before the position gets into a profitable position. Now, as per market structure rules, so markets, just give me 2 minutes. This will be clarifying your confidence. Market reached this high, came down here, made a new high, came down here. Now, as per market structure, if the uptrend had to continue, right? Now markets was moving in higher high, higher lows. Now this was a higher low which was formed after this particular low. And if the trend had to be continued, market would have to cross this particular high. But did that happen in the markets? Absolutely no. But as soon as this swing was formed, because I had a very big SL around here, right? Try to understand the SL was extremely big. That was the reason as soon as this particular swing was formed, I moved the SL from this swing to this swing. Fortunately, unfortunately, my SL was taken out very, very quickly. But what did I save? I saved myself from taking a bigger stop loss. Now, you might do all the planning, you might do all the analysis, but still there might be some days where in market will still go against you. And in that scenarios, you have to make sure that you don't fight with the market, right? Now, the SL was unusually big for myself. The positions which I usually take do not have such big SLs, but then again, it was as per the plan. So I did take an entry. Of course, the quantities were lower for me. And as soon as the swing, this particular swing was formed, I moved the SL from this swing to this swing, which eventually got taken out. And I'm glad that I got out of here, right? Now, for me, the discipline with which I stick to my SLs is very, very good. Uh, and that is why I don't place stop losses in the system. But I am ready with the trigger to pull the plug on the trade as soon as the SL is triggered. I will not wait in hope that the markets will reverse and again go back in my position. Absolutely not. So one thing has to be very, very clear. If you are taking trading as a serious thing, Make sure that you know your SL before you are punching that order, right? Before I punched in the order around here, I knew that, okay, this is the SL. SL is big. I reduce my quantity because, of course, in case if the market will test my patience, and even if it has to take the original SL, I have to adjust my quantity accordingly so as to manage my position sizing as well as the risk reward. And that was the reason why managing, like I said, you need to know your SL right before entering the trade. Do not try to fix your SL after the trade. And once market will reach out to that SL, make sure to take that, right? Market is not going anywhere. There will be ample trading opportunities. Post this trade, I took another long trade. Now again at the same levels. After coming down, market again changed the structure, right? I will only be focusing on today's market structure. Make sure to follow it with me, right? Around here, when this lower high was taken, sorry, the higher low was taken out, we formed a lower low on the market, right? But then again, after the pullback, this low was also not breached. And this was a W pattern formation or a base formation, which is there. Around here is after this particular swing was taken out, a higher high was created. This was the last high, a higher high was created, right? Try to understand how am I planning my trades? I did not take an entry if as soon as a higher low was created, I waited for the structure to change entirely, right? Now, a higher low was created, a higher high was created. I waited for a pullback, which is another higher low. And as soon as this high was taken out, I entered into the trades at 11:25. This was the candle. I entered into another long trade with my SL being right below this particular swing. The markets did test my patience. Once the market created this swing and reached around here, I shifted my stop loss from around here till here. Markets gave a very good move around here. Now I exited at the formation of this particular candle. Now, this is an inverted hammer, hanging man, whatever you want to call it, name the candle. But for me, it showed me some selling pressure which is coming in from above. And that was the reason I decided to get out of the trade. Now, I had recovered the loss for the first trade and I was in some profits in this particular trade. And that was the reason I wanted to play it safe. And I got out of this particular trade around when this particular candle gave its closing. Even though this is a green color candle, even though not the most right in exit, sorry, but I still decided to get away because keeping in mind the sentiment with which the candle had formed around here. Now, post this, one trade could have been taken was around here, but then again, it happened at 245, which was a short trade after continuation on the upside along with a good RSI divergence. Now, many people fail to understand why did the market fall from here. Now, the market will fall if it has to, but there will be signs. And if you can read those signs, I think you can capitalize on that. Now, I had observed this particular negative RSI divergence, but then the entry came in much, much later at 245. It was a 245 candle, and I don't take fresh trades around here, but in case if somebody would have taken, this would have been a good trade because markets fell with a good momentum, gave a small inside bar as a pullback, and then again formed another lower low. So, yeah, that's it for today's trade. Now, I have been these, I hope the trades that I took were clear, the logic behind them, as well as what goes on inside my head when I am sitting in front of the screen in the live markets. In case if you have any doubts, please put them in the comments or you can message me directly on X or Instagram. I will respond to them. For tomorrow, we'll first quickly have a look at the daily candle. Now, as I have been telling you guys, I am expecting some volatility till the time we are in between this particular area, right? We need to move either above this or below this particular purple line which I have to give us some more clarity in the markets. But until unless we are there, we will be facing some volatility and some confusion. Like, what do I mean by volatility? Now, India VIX as is at its lowest. But what do I still mean by volatility? By volatility, what I mean is a non-trending market, a market which is changing its structure multiple times in a single day. For example, today's market, like I told you guys, uh, around here, the market was in a bullish struc price action market structure. Around here, it again turned into a bearish, immediately turning into a bullish market structure, again turning bearish for slight period of time, again turning bullish, ultimately again turning bearish. Right. So market structure is the key. If you can train your eyes into spotting the change in market structures or what in which way is the market forming out to be, you can take really good trades and you can be on the right side of the market. Instead of being hunted out, you will be the one who will be hunting those SLs. So I hope the point is clear. Now for tomorrow, my plan of action will be very simple. We don't need this swing. I will keep this in low, but for now, I'll just delete it. Now there is something which I observed on a 75 minutes time frame while I was preparing the video. Again, let the markets commit to you before you commit to the market, right? Does this look like a, wait a second. Does this look like a head and shoulder pattern in the formation? Yes, it does on a 75 minutes time frame. After creating this higher low, we should have been aiming for a higher high in case if the structure was to be changed. But then, as I have been telling you guys, it is time for some volatility. Please make sure to keep your quantity small, right? Below this, I will be short with some good confidence because of the head and shoulder pattern that I just showed you guys on a higher time frame. Any break below today's low with a pullback, I will be shorting the markets. Now, what are the other levels that I need to pay attention to? I will again be using fib. If we approach this level and form a any bearish scenario around here, this will be our cue to go short. Above this is only where I will be planning a long entry. Now, I'll quickly also just check out in case if the market has to reverse. Again, not the head and shoulder has to fail. This is quite below the 0.5 to 0.618 zone. The markets have actually kind of taken the support from exactly the point 0.5 of this entire up move which came in. Now, I am not too very confident of this particular level, but still, in case if we see a positive price action around here, maybe uh, inviting fresh sellers below this and then it gets reversed. That is where we can look for a long entry around these levels as well. But then my more biasness will be towards the trade on the short side, right? And below this, of course, as you guys know, needless to say, below this particular level, we are automatically short. But then on a 5 minutes time frame, why I also took out time to draw this particular level was on a 5 minutes time frame, there is also an open-ended divergence. Now, what do I mean by an open-ended divergence is markets formed a new low towards the end of the day, but on a 5 minutes time frame, the RSI formed a new higher low. So that is kind of a positive divergence. Will and it's open-ended because in case if we break around here and we go down below this level, this divergence will have no value. So that is why it's called as an open-ended divergence. And that was the reason I actually also took out time to draw this particular level so that we are sure that in case if we take some support from around here, we can look for a long entry as well. So this will be the simple plan, but I'll try to keep my trading activities again to bare minimum for tomorrow's market. So yes, that wraps up our plan for Tuesday's market. Remember, no setup is worth chasing if it doesn't align with your strategy. Stay patient, stay disciplined, and the right trades will come to you. If you found this analysis useful, don't forget to like the video, subscribe to Your Nifty Guy, and share it with your trading circle. It really helps us grow together. Also, drop your views in the comments. I would love to know what levels you're tracking for tomorrow. Until then, trade safe, trade smart, and I'll catch you in the next one. Cheers, guys. Thank you.